Hey everybody, what's going on? Fabian for Liberty, FabianForLiberty.com. A lot of news going on. The power outage at the Super Bowl, the Navy SEAL sniper Chris Kyle that was killed. Of course, important news that's being ignored is the news that I'm going to talk about now. And if you want to get your news about the Super Bowl or whatever else, you're not going to get it here, sorry. But first off, I want to get into a follow-up to a story I did just last week about Egan Jones. If you remember, one of the credit agencies here in America that's been hardest against the U.S. government and their 16 trillion plus growing debt, plus the hundreds of trillions in unfunded liabilities like Medicaid, Social Security, all these other programs that will never be funded and those will likely go bankrupt at some time. Now another rating agency, S&P, who has made a big fuss last year when they downgraded the U.S.'s credit score, they're now being sued, or S&P has come out and said that we will be sued by the DOJ. So yet another example. As we talked about in history, we know that when the financial picture of a government starts to get reckless, they typically do one of a few things. They do price controls, or they basically stop publishing the information. They start publishing the reports, like Argentina has stopped tracking their inflation when it comes to food. They're no longer going to basically disclose that information, and they're going to pretend it doesn't exist, and maybe some kind of magic fairy pixie dust will fall down, and it'll make all that stuff go away. But that likely does not usually happen. They're silencing the credit agencies and the rating agencies that have been most hard against the U.S. because they don't want these rating agencies to alarm the public to what government already knows, to what you and I already know, that the U.S. government is technically bankrupted. And these are just all the motions before we have some kind of big event and it all ends very badly for many people. Now, I will point out that Egan Jones was barred from being able to do any rating against the U.S. credit score for, I believe it was 16 or 18 months. Now they're suing S&P, but Moody's, who's tied to Warren Buffett, who was on the front just on the cutting edge of rating junk mortgage bonds AAA, they're mysteriously fine. There's no problem with them whatsoever, and they've also not downgraded U.S. debt either. So I assume everything is fine as long as you play by the rules and you basically don't tell the rest of the world what they probably already know, that the credit rating for the United States is basically a total fraud. Now, here's a story, though, that I think is really telling, and it paints a picture, or should I say, really is informative to what, again, I believe our government, or many in our government already know, what the Federal Reserve already knows, and then I'll leave it with the conversation I had with some friends of mine over the weekend. I ran into them at the grocery store, actually some clients of mine. But here's a story from Business Insider. According to a report by the Corporation for Enterprise Development, it shows that nearly half of American families live on the edge of financial ruin. Half of them. So some big financial event, some big incident, they can't pay for it. They're going to likely suffer, and there's going to be some problems. Half of it, over 130 million families in America. Think about, ladies and gentlemen, what happens when interest rates go up 5 points? What's going to happen with the inflation in this country? What's going to happen when food prices continue to skyrocket? And all of the people that are ill-equipped, unprepared for those. The government knows it. Now, over the weekend I had an interesting talk, and I want to stress this again, that I've kind of been harping on it the last week, is that, there's been tough talk, supposedly, from the Fed that they're going to raise rates. You and I both know they will never raise rates. We are at that end game period where they cannot raise rates, okay? They're keeping rates as low as they can. They're starting to give loans to basically anybody to go buy a home. The no money down loan, yes, is back. Like I mentioned, I believe last week on my other channel, the Note House channel, that FHA, a third of all new loans by the FHA were 3% down or like 3.5% down. So between those and no money down loans, they're back. They're manipulating every front of the economy, whether it's housing, stocks. I mean, the Dow over 14,000 is such a scam. It is so tied to inflation. And I feel so bad for people that can't see it. I mean, over the weekend, I heard some people like, while I'm at the grocery store, they're commenting on, Dow's 14,000. And they've only done that to sucker back in the people. And they've been very successful at doing that. A few weeks back, I think it was USA Today reporting that, most Americans now are optimistic about these stock markets. They're back in. Middle class has been suckered back in. And today the market was down 130, but that's just the beginning. We are at, like I said, that end game period. And so the manipulation will continue. And it's important you know that as an investor or as somebody that may be looking to invest or get into a certain type of asset class. If you know the manipulation, if you can get yourself inside the minds of these people, you could somehow better gauge what the outcome will look like. For example, my expertise being in housing, I think that there'll be a few more years of that asset class increasing in value because they believe that to have any economic recovery, they need to have a housing recovery. Now, will it work? It likely won't work, but will there be opportunity over the next 2 to 4 years? I believe there will be. But the fact that nearly half of American families are on the edge of financial ruin is not a story they want you to know about, nor do they want you to know about this. Low rates force companies to pour cash into pensions, from the Wall Street Journal, talking about how many of these big multinationals are having to pour in billions of dollars into their pension systems because they're not getting high enough returns. Now, this is the same thing for teachers' unions. It's the same thing for all of these pension funds from all these companies and unions as well. They don't have the money to pay these people back. In fact, to pay them back, they have to get like 7 to 10% returns, which they'll never get. So it is one bubble after another. And as soon as they start popping, it'll be this contagion that spreads very quickly. So the half of American families that are basically on financial ruin will likely be more like 75% of American families. In order for you to be in the 25% that actually doesn't get hit and don't land in financial ruin, I suggest you begin to expose yourself to some kind of specialized knowledge that makes you valuable when the proverbial SHIT hits the fan. I'm Fabian for Liberty. Check out FabianForLiberty.com. Thanks for watching. Subscribe, share with your friends. I'm out.